but it's actually really still incredibly busy with the earnings announcements. And that's because the 800 or more companies that went IPO or SPAC during the pandemic are all kind of reporting later in the earnings season. So those are the companies that we're going to get this week and next week. And there's a lot of interesting things going on with many of them. They might not be the big cap, mega tech companies like the Microsofts, but they have interesting business models and the charts are interesting. So which ones should you be watching this week? I brought 5 companies that you should check out. Not all of them were the SPACs or the IPOs, but there are a couple thrown in there. And these are the ones that I feel like could tell us something about what's going on out there in the economy with the consumer and just whether or not maybe we're at a bottom in this sell-off that we're having here in 2022. So let's take a look at these 5 companies and you'll see what I mean. The first one is not one of the recent IPOs, but it is D.R. Horton, ticker DHI, and they are a national home builder. That's why I've chosen them. There's 2 home builders reporting this week, D.R. Horton and KB Home, and we've already heard from several others in the prior few weeks, but every week that goes by, it seems like things are changing in the housing market. So this is another chance to tune in and find out what is going on out there now that the mortgage rates are above 7%. So as you can see, this chart is pretty good. They just had 2 misses back then in 2018 and 2019. They didn't even miss during the start of the pandemic. That's very impressive. And the shares are off this year. They are down about 30% year to date, but as you might be thinking, well, that's not that bad given what is going on out there in the housing market and the slowdown that all these new construction home builders have seen with their sales. So what does that mean for these stocks? Can they hold on here, or will we see further decline as the market kind of erodes in housing? I don't know, but I'm going to be tuning into D.R. Horton to find out. Then we're going to switch it over to one of the IPOs, SPAC type companies. As you can see, Roblox, they went on to the public markets there in 2021, and it's been kind of rocky, at least on the earnings surprise front. So just that one beat out of all those misses, and they did have another big miss last quarter. They now still have a market cap of $22 billion, even though the shares are down 61% year to date. They've had some good data with like the number of subscribers, their user base has been growing, but they're still have no PE because they're expected to lose $1.34 this year and $1.59 next year. So the market, Wall Street, just isn't liking these companies that don't have any earnings, and Roblox is one of those. Then we're going to switch over to another stock that I like, which is Digital Turbine, ticker APPS. It's been a wild ride too, as you can see, but they also have a pretty good earnings surprise track record here with just the 3 misses in the last 5 years. And this one on the online advertising side. So really boomed when all the social media companies were also booming during the pandemic, and now almost all the way round tripping here. But this one actually does have earnings. So expected to make $1.30, let me see, I can't read my writing, $1.39 here in 2022 or fiscal year 2023, and then fiscal 2024, $1.66. But year to date, shares are down 80%. So you are getting them pretty cheap on a PE level, just 8.9 times. But it is a Zacks number 5 strong sell here because the estimates are being cut because of the difficulty in the advertising industry right now with it slowing. So this is one that's a little bit iffy, and it'll be definitely a must-see to see what's going on behind the scenes with Digital Turbine. Then we're going to switch it over to retail with one of the bigger names that are on this list. Tapestry, ticker TPR. They own Coach. They also own Kate Spade and Stuart Weitzman. So they've got all three big brands. And as you can see, big boom during the pandemic, also great earnings surprise track record. Their only miss in the last 9 quarters is that one going back there at the start of the pandemic in 2020. So otherwise very consistent, but year to date, these shares are down 21%. That's not as bad as a lot of the others, right? So you're getting them a bit more on sale because Tapestry has always had the good earnings story going. So their earnings are expected to be up this fiscal year by 11%, and they're expected to make $3.85, and then see another 12% earnings gain next year in fiscal 2024 at 432. So double-digit earnings growth for this company that's been around decades now is pretty impressive. But because of the share decline, these shares are actually cheap with the PE of just 8.4, and they have great free cash flow, expected to pay this dividend yielding 3.7% right now. So that's quite impressive. That's better than some of the energy stocks are doing, 3.7%. But what's the fly in the ointment? Do they have excess inventory? A lot of retailers have the excess inventory this year because they just pre-ordered thinking the supply chain challenges would happen again like they did last year. Also, Tapestry, big in China. And so what's going on with their international business? We're American tourists flying over to Europe and buying with the dollar strength, like we've seen with some of the other luxury retailers, that the European sales have been good. We don't know yet. It's kind of a mixed bag. And so this one, you will be interesting to see what is all of these, impacts going to be on their earnings. But it is cheap, and you do get that big dividend. So I'm liking Tapestry here, and I'm going to be tuning in. Then we're going to wrap it up with one of the big winner growthy type names of the last few years, Yeti. They went public in 2018, as you can see. So not a little bit earlier than some of those other ones that went like during the pandemic, but still a great earnings surprise track record, just with that one miss now. And it was last quarter. So will they redeem themselves and come in with a beat? I'm feeling like they may. Now, remember, Yeti does the outdoor products like the coolers, backpacks, like, the little mugs, all of that. That was huge during the pandemic because we were, staycationing, we were going outdoors, but now down, coming down big. Year to date, these shares down 62%. Over those years since the IPO, though, shares are still up 91%. And that's, a nice return if you've owned it since that IPO. But if you haven't, if you bought at the peak, it's been quite a ride down. What does the earnings look like on this one? They are cheap as well, with the forward PE of just 13. And so you're getting some of these big kind of popular growthy style names on sale here. And, if it drops even further and gets a little cheaper, we're really going to see some buying opportunities in some of these growthy names. But Yeti, still seeing a little bit of a downdraft there. Will this earnings report turn it around? We shall see. So as you can see from this list of stocks, it's kind of a mixed bag this week, even though it is a busy week. So some of these companies are on the smaller side, some are not, like Roblox, but it's all a matter of picking the areas that you're interested in and tuning into some of these names. On the retail side, Capri Holdings is also going to report. That's Michael Kors. And so you might want to tune into that one as well, along with Tapestry. But there's, plenty to be looking at and tuning in for all week long this week, as well as next week, when we're going to get even more retailers and other, IPOs and SPACs, recent names that have come on there. So there's plenty still to see. You want to be sure to subscribe and get all of our earnings charts. Go to Zacks.com/YouTube, sign up on our YouTube page. And as always, I'm going to be tweeting out a lot of these charts and tuning into some of these conference calls. So I will live tweet out what's going on the conference calls. I know that annoys some people on Twitter and StockTwits, like, why are you posting all this stuff? But I do think it's important to tune in and listen live and not just read the transcripts on what these companies are saying, because you get a little more context when you hear their voice inflections or the annoyance of the analysts or the congratulations of the analysts or whatever's going on that doesn't really translate on a transcript. So I like to tune in, but I will tweet it out for those of you who can't listen in live, and so we can see what's going on. But I will be tuning into some of these home builders and some of the retailers and a few of these other names. So be sure to follow me on Twitter and StockTwits. I'm at the same handle on either one, at Tracy Reinick, just my name, on both of those platforms. So that's all that's going on this week, but there are a lot of names. So it's going to be busy. And I will be back next week with some more earnings charts, especially on those hot retailers.